What's going on, team, and welcome back to the channel. So we're going to talk about what happened today. It was a complete massacre in the stock market today, right? So 1%, anything over 1% is considered more than usual what the retracements are with the stock market on a single day, of course. And we saw over 1.5% today, which is pretty huge in stock market. And real quick, before I talk about that, sorry, I still have not finished my office. So I need to put something up right there. It's a big gap over there, but I got the computer in front of me and I actually want to go over some charts. But okay, let's go back. So what happened today? So why did the stock market sell off so hard? COVID predicted it. We're going to get in the market crash. Should you put all your funds and invest in the crypto? A side note, but anyway, so what happened today? So of course, if you watch the news, if you're subscribed to things like I talked about before, Market Watch, Yahoo Finance, you get the news right on your phone, right when you wake up, any hot breaking news, and we're talking about inflation rising. So with inflation rising, of course, that means what defeats the inflation. So for the Feds need to raise interest rates. So what happens when they raise interest rates? Well, it's going to cause an overreaction in the stock market because the stock market does not like high interest rates, because that means to borrow money, it's more expensive. So it means it makes people want to pull out their money from the stock market, so they have to borrow more money because it gets more expensive. So all this money that's factored into the stock market right now, that's all this margin money that hedge funds and retail traders, big investors are taking. So borrowing money to invest and make more money in the stock market. Once the interest rates go higher due to inflation, they're going to want to pull all of that money out, right? So we're the most that we've almost been in history when it comes down to how much margin is invested in the stock market. And of course, the Feds have come out and said they're not going to raise any interest rates until 2022, until the end of 2022 into 2023. But still, when you hear news of inflation, the investors get worried that potentially they might change that. So it might happen sooner. It can be summer 2022 or before. So right now we're getting a little retracement because we're taking into account what can happen in the future, which is actually a really good thing, because that means that when it does happen, we're not going to have a huge crash. A lot of investors are kind of like, we're slowly kind of falling into it. But does it mean the stock market is going to crash? No, we're super overextended. The PE ratio is over 40, which is one of the highest in history. It's been that high back in 2001, the bubble crash of the dot-com crash, 2008, the housing crash. So now we're back at those levels, which means if the PE ratio is so high, we're so overvalued that, that if we slowly kind of fall and kind of let the fair value catch up a bit, it's much better than just one huge crash. Like it happened in 2008 on the bubble crash. I don't mind these big retracements. We talked about this. Actually, I got this pie right from me. It's actually over 2% pullback we had today, which is pretty massive. And this really gives me some of those March, April vibes when we had the COVID crash, February times. And it's really exciting times. Actually, if you're just getting into stock trading, it can be dangerous. You can be scared of this big pullbacks like this, but it's actually such an exciting time when you see these huge pullbacks. One, if you're a long-term investor, hey, it gives you those good discount deals that you want to get in. You want to get in on days like this on some of your positions for long-term. You don't want to get in on days that we're all-time highs. If you're a day trader like I am, as a long-term investor, these days are great because it gives you that high volatility that we love to trade. Even on the downside, we played so many puts today, and like I would say, I had a put over 400%, some puts over 200, some over 100. When we start off, the fall is gonna be this hard, so we actually did take a little bit of losses on 2 plays, but our puts completely killed it. End of the day, amazing green. If you're not in the Discord group, I don't know what you're doing. First of all, we're expecting this pullback. I talked about it in every single live stream that I had. I had a full week of live streams last week on Instagram. You can follow Instagram Small Players, and every single live stream I mentioned, we're going to pull back. We're going to pull back. We're going to pull back. And, we've been getting it. Why did I know that? Well, let's look into the chart, right? So I got here the SPY as S&P 500 charts. And if you're subscribed to our weekly newsletter, you got this chart. You knew this was going to happen. We've been predicting since up here, right? So this whole week I say, guys, first of all, what do we see on we love technical analysis, right? Because technical analysis lets us predict. The inflation news came after this, but we're ready for this. We're ready to pull out a lot of our swing trading profits before. We're ready with some puts. We were not surprised this was going to happen. That's what happens when you invest in education, invest in invest your time into learning. You're prepared for things like this. All the new investors, they're the one losing right now. All the retail investors have been doing it for a long time. Myself, all the hedge funds that we're all kind of expected this. We're taking all the money that the retail investors, the newbie, the rookie investors don't know. They're getting scared and panic selling. So we're taking advantage of that. And if you're new, make sure you do a lot of education, because right now it's not 2020, it's not a COVID crash. 2020 was such an easy bull market to trade. That's getting a little more difficult. It's not hard as it was pre-COVID, but it's still a little bit more difficult. But let's talk about it. First of all, we've been trading in this channel since December, and as you guys can see, perfect trend line. It's been respecting it very much, and right around here we had this consolidation, and we kept getting rejected. So we were ready for this, and we see this first move down. We tried to push back up, and it fell through. Right, so first of all, we were ready. Also on the Fibonacci level, we were at a pretty important level for potential retracement. But we also, the main worry for me was that we were trading this channel and patterns repeat themselves. If we fail this channel, if we've hit the resistance or got rejected multiple times, most likely we're gonna get rejected again, right? And if we break above the channel, hey, great. We took some short positions up here. If this breaks through, our stop loss is really, really tight, and then we can long on the retest. And it's perfect. And if it falls, look at our our profit, our risk reward is it's amazing on this one. So we had this channel, we had this gap fill too that we still need to fill around here, 401 to 400 or so to 403, and that's kind of my target right now. It's also the bottom of this channel. The 50 EMA here, we were able to kind of land on it. We dipped a little under, but right now this 405 is going to be some pretty strong support, and so we're sitting on right now. It's also the 50 EMA. I do expect us to fall a little further, then and move back up. Also, keep in mind, also we got into May, right? I spoke about this. We spoke about this in the weekly newsletter we sent out. We spoke about this in the Discord group every single day. I spoke about this every single day on our live stream, the stories. I mean, I send out like 1,000 warnings. I'm not one of those YouTubers that, one of those guys on the internet that's like any red day, it's like market crash. If you guys follow me, I'm really bullish long term, and I never mention market crash unless there's real signs of a potential market pullback, retracement. Like I said, it's not a crash, but it's a retracement. I don't post a video saying it's potentially we can dip if it's not very likely, right? So if I send out signals, potentially, I'm telling everybody, hey, be careful, watch out, play your plays, but just keep this in the back of your head. Be aware of where we are with the stock market. Please take that in account. I don't just make videos just to get clickbait when it comes down to market crash and things like that. But anyway, so also May is a month that so let's go back to the Small Player Weekly newsletter real quick. So May is a month that the S&P 500 doesn't perform too well. It's okay. It's on their best month. It's an old saying, sell in May. And if you can tell, even this is a weekly newsletter we send every single week. We send this out week in last week, and we show that usually the May doesn't do too well, because the main reason being that the dollar does really well in May. Usually the dollar goes up and it does well, and when the dollar goes up, some of the indexes don't do well, and that's another reason why I was afraid of this potential pullback. Also, the being super overextended. So what can we expect from the future? So we're getting the pullback. My personal goal is 400 to 403. The next supports are 403, 400, 396, 398 also. So right around this level right here, 397, 398 is probably the next major support after 400. I really don't think we're gonna pull more down than 400. I think it's a good retracement. Getting this retracement are good. We can't just go straight up. So if you're long-term positions, great time to add. If you're getting worried about long-term positions, maybe you should not be in that long-term position. Because all the companies that I like that can get them on a discount, I'm happy about. I'm not worrying. I'm not panicking. Not panic selling. I'm not scared of it. So think about it. If it's a company that you're like, oh no, it's going down. You're really stressed out about. Maybe it's not a good long-term position. Maybe you should revisit your long-term positions, right? And I mentioned that a lot of times when we're at all-time highs. When you're at all-time highs, that's the time that's like, hey, maybe there's a position I'm not confident in. Let me cut it now. Right? But now is the time to add. It's not the time to buy some positions. Like I said, I think we're gonna keep falling a little bit further. I think 400, 403, the gap fill is the next target. Maybe. So I don't see that happening but I don't see anything below 400 happening. Remember, every reaction stock market is not a reaction. So we got news of inflation, the stock market is going to react 2, 3, 5 times as much of an overreaction it really should have. Maybe we were just needed a 1% dip, but then we got a 2 almost 2.5% dip, right? So over the stock market always overreacts. The stock market is emotional. It's like your ex-girlfriend that it's like, you know, she wants you back, right? So it's very, very emotional creature, the stock market. So you gotta be aware of that when you're trading. So my goal, my plan is to be careful. There's not an easy market to trade. Always trade with a plan. You gotta have risk management, because if you're in some long position from a couple of days ago, you got completely destroyed. Especially if you're trading options or some penny stocks. So always trade with a plan. I'm probably gonna line up on my swing trades, because we're in a choppy market, in a very the more I look at it, the more bearish it looks to me. I don't think it's gonna be a stock market crash tomorrow, and Friday it's gonna be really interesting to see what's gonna happen. But I expect us to fall back to 400, fill the gap fill this gap right here, and start going back up. I kind of see potentially a Fibonacci 5 move on the down pattern. So if we start from here, 1, 2, 3, maybe I see some kind of fight back. You know, it's a huge dip. Usually you get some fighting back, and maybe end up on a gap, and then start going up. Or you can even consider this an ABC. Another option is that we might have gotten an ABC in this case, which could totally be true. We could have gotten an A, B, C, and now we reverse the main reason I don't think it's an ABC. I think it's an 5 count on the downside, just because we didn't fill this gap. I really think we're gonna fill this gap, and inflation is just the catalyst to help us fill that gap. And I think once the inflation, like, you know, the Feds come out and mention we're not raising interest rates until December 22, and that's priced in the stock market right now. That's gonna help it recover, and I think we're gonna push all-time highs within a couple months max. So I don't think it's not a bear market. It's not a market crash. You know, it's good retracement. I like seeing from the stock market. Good place for you to start adding to some positions you might have missed on, and a good place to maybe cut on some position that you were not comfortable in, or just to make you realize maybe you're not as confident in this position as you should have been. Now let's talk about the growth stocks. The growth stocks, the tech stocks are getting destroyed, and honestly, it's probably just getting worse. The main reason, because growth stocks depend on money. So the closer we get to that 2022 date, 2023, where they're gonna raise interest rates, guys, it's only gonna get worse. Just because if money is gonna be really expensive to borrow, people are gonna stay away from those growth stocks, those high PE ratio stocks. But at the same time, if you believe in a growth stock, it's because you believe in their future, so you don't care about that stuff. You're still gonna average down your position. You know, a company like Tesla, I personally like. You know, I've been in Tesla since the very low 200s. Since I first started averaging down into it. You know, if it drops to 500, I'm happy. That's the level and then my next level to buy is 555. Right? I didn't FOMO at 800, 900, 700. Why? Because I know these things happen. My stock market has perfect cycles. We're gonna go to the interest rate, and we're gonna have some kind of form of bear market, and the sign is gonna happen. We're gonna have another bull market. These are all cycles that happen every time, and it's only something you learn off experience, unless you're learning from somebody. So my recommendation for you guys: be careful. Follow me on this. Follow the Instagram to keep you guys updated with this kind of what to expect in the stock market next. The crypto market, another market's taking a dip, which is really nice today because it lets me add on some of my positions. So my main thing for you guys is be careful. This market is just gonna be a choppy market, and I'll see you guys all in our Discord if you're not part of our community.